I would say to anybody, define the assets, the goods and the services that you aspire to over the next decade, then figure out what the inflation rate is on those things and ask yourself the question, how will the economic policies change them? Because if you wanted to retire with no risk and never work the rest of your life using a risk-free government bond, the price of that went up by a factor of 25. So some things are going up fast. It gives people an option, right? It gives optionality to individuals. If I live in a country on a ranch, or I have money in a country and the country is printing the currency to drive it to zero, and I don't have an option to store my value, I'm going to lose everything. But if I can swap my value into Bitcoin, then I'm going to preserve some of my monetary energy. And at some point, perhaps the central bank will say, I guess probably we should stop printing so much money because all of the money is flowing out of our currency into this other store of value. And that creates a check and a balance, and hopefully some goodness, some virtue in the world, a good thing. And I'm reminded of a brilliant insight that Saifedean Ammous, the guy that wrote the Bitcoin Standard, he's writing a book called the Fiat Standard. And when you think about Bitcoin Standard versus the gold standard versus the fiat standard, you realize that the problem with the gold standard is gold miners produce 2% more gold every year. It's hard, but they can create it. Over 100 years, that means you lose 85 to 90% of all your money because the gold miners are your enemy. Well, the brilliant insight that Saifedean had is that fractional reserve banks are fiat miners. If you actually have a 5% reserve ratio, you can take $1 million of reserves and you can create $20 million worth of currency, which debases everybody else's currency. So the fractional banks, the banks have always been creating more currency, and the central bank's been creating more currency. But what we just saw when that rate went to zero is the fractional banks were able to create unmitigated amount of additional fiat currency. So the central banks are only part of the challenge. The fractional banks are the other sort of players that are debasing the monetary supply. And I think you're right, it's been underestimated. And I think it's rational to ask the question, just when is all this money that's being created by banks going to manifest itself? Yeah, and I think, well, the first answer is it already is if you define inflation as asset inflation. Like we already have, hyperinflation or rampant inflation in assets. Right? You know where you have real hyperinflation, if you want to use that term, it would be in a short-term bond that pays you $50,000 a year in income. At LIBOR at 550 basis points, that's like $1 million bond. It costs you $1 million for Social Security if you don't take any duration risk, no long-term interest rate risk, and no credit risk. It used to be for $1 million, you could have risk-free retirement. And LIBOR today is like 20 basis points. So it would cost you $25 million for the same bond. And so in 10 years, the bond went from $1 million to $25 million. And if I told you Social Security, that thing that you're working to buy, it went up by a factor of 25, you would describe that as hyperinflation. So that's a high quality asset. There are a lot of assets that are inflating at 10%, 15, 20%, 30% a year, but they're not measured by any government economist. The most important insight that anybody could have is inflation is a vector. You can calculate a different inflation for for any type of product or any market basket of goods and services and assets. And if you don't include assets along with the goods and services in your market basket of desirables, you haven't established a relevant inflation measure or cost of capital to be concerned about. Every individual has to define the desirable market basket for themselves. If you desire to sleep in your parents' basement the rest of your life, then your market basket of aspirational goods, services, and assets will be different. And if you desire to be rich and have a yacht and a house and a jet, right, your market basket of assets is going to be different. So the inflation rate is a function of your aspiration, and a family of 4 that wants to live in a suburb with a yard and send their kids to college has a different market basket of assets. So I would say to anybody, define the assets, the goods and the services that you aspire to over the next decade, then figure out what the inflation rate is on those things and ask yourself the question, how will the economic policies change them? Because if you wanted to retire with no risk and never work the rest of your life using a risk-free government bond, the price of that went up by a factor of 25. So some things are going up fast.
Yes.
And that will determine how you feel about the macroeconomic environment. And it will probably determine what kind of portfolio you invest your assets in and how you choose to cope with this. One of the most brilliant Bitcoin maximalists in the world today is Ross Stevens, the chairman of Stone Ridge and NYDIG. And Ross wrote an annual letter to his shareholders. And in the annual letter, he said, and I quote, "Each citizen now has a choice. You can stay on the fiat standard in which some people get to produce unlimited new units of money for free, just not you. Or opt into the Bitcoin standard in which no one gets to do that, including you." And I thought that was the most brilliant statement I have heard in a long time. And it describes exactly what you just said. In the fiat standard, central banks and non-fractional bankers have the right to produce unlimited amounts of currency for their benefit, for their purposes, just not you. You can't, they can. That's the fiat standard system. And if you choose to stay in that system and accumulate wealth in that system, if you buy bonds that pay fiat coupon, if you buy stocks that pay fiat, that are valued on fiat cash flow, if you buy real estate that collects fiat rents, if you store money in fiat cash, you have opted into the fiat standard where someone else can print unlimited units of money, just not you. And your choice is to switch to the Bitcoin standard where nobody can do that. And it's only now dawning on a lot of the world that they have to make this choice. Everybody has to make this choice.